What if everything you've been told about safe money in the UK is actually a lie? Imagine working tirelessly, saving diligently, only to find your hard-earned wealth silently vanishing. This isn't a conspiracy theory. It's the stark reality facing millions across the United Kingdom right now. You think your money is growing, but it's actually shrinking, eroding day by day without you even noticing. If you've ever felt like your money isn't stretching as far as it used to, despite all your efforts, then this video is for you. Stay tuned, because I'm about to expose the hidden financial traps that masquerade as security right here in the UK. Have you already felt the pinch of rising costs? Let me know in the comments below. For decades, we've been conditioned to believe certain financial products are impenetrable fortresses for our savings. We're told they're safe, guaranteed, or low risk. Think about Sarah, a retired teacher from Brighton, who diligently put her life savings into what she thought were secure options, only to watch her purchasing power dwindle year after year. Or Mark, a young professional in Leeds, advised to park his emergency fund in a cash ISA, confidently believing it was the smartest move. What they both discovered, painfully, is that the biggest enemy to your wealth isn't always the stock market crash. It's the insidious, invisible forces of inflation and hidden fees, quietly gnawing away at your financial future. It's time we talked about why these seemingly safe choices are, in reality, financial quicksand for the average British saver. We're talking about bad financial habits disguised as sound advice. The purpose of this video isn't to scare you, but to arm you with critical knowledge. We're going to pull back the curtain on 9 specific safe assets in the UK that are secretly undermining your financial health. By the end of this, you'll understand their pitfalls, why they're not serving your best interests, and most importantly, how to avoid these common UK investment traps. This isn't about forbidden secrets, it's about uncovering lesser-known strategies to protect and gradually improve your financial situation. Get ready to rethink everything you thought you knew about money in Britain. Now, let's dive into the first silent destroyer of your wealth, a trap almost everyone in the UK falls into. Trap 1. The UK savings account trap. It sounds so sensible, doesn't it? Put your money in a savings account. It's safe, accessible, and guaranteed by the Financial Services Compensation Scheme up to £85,000. But here's the brutal truth. For years now, the interest rates offered by most UK savings accounts have been consistently lower than the rate of inflation. Imagine inflation like a relentless, invisible thief, constantly pickpocketing your purchasing power. If inflation is 5% and your savings account offers 1%, your money is losing 4% of its value every single year. That crisp £20 note in your account today buys less and less tomorrow. It's a classic example of a safe asset that actually guarantees you'll lose real money over time. Many people are unknowingly stuck in this cycle, wondering why they feel poorer despite saving. But this is just the beginning. The next trap is one many aspire to. Trap 2. Buy-to-let property. For generations, property in the UK has been seen as the ultimate safe investment. Bricks and mortar can't go wrong, they say. And while property can certainly deliver returns, the buy-to-let dream has become a complex nightmare for many. Beyond the rental income, there are colossal hidden costs and risks. Think about the hefty mortgage interest payments, often rising unexpectedly, stamp duty, solicitor fees, and ongoing maintenance, from leaky roofs to broken boilers. Then there are landlord taxes, changing regulations, potential void periods where you receive no rent, and the massive capital gains tax when you eventually sell. Many UK landlords are now finding their yields squeezed, making it increasingly difficult to turn a real profit after all expenses. It's less a passive income stream and more a full-time, high-stress job, often with returns that don't justify the immense capital and effort involved. But if property isn't the guaranteed win, what about something explicitly designed to be safe? Trap 3. Premium bonds. Premium bonds, the nation's favorite savings scheme, offering tax-free prizes instead of interest. Who doesn't love the idea of winning £1 million, right? But let's be brutally honest. For the vast majority of investors, premium bonds are a low-probability lottery, not a robust investment strategy. The effective interest rate for the average bondholder is often well below inflation. Your chances of winning a significant prize are astronomically low. While your capital is safe, it's essentially parked in a holding pen, losing its real value day by day. You're trading certain, albeit low, returns for the incredibly slim chance of a life-changing windfall. It's an emotional bet, not a financial growth engine. For real wealth creation, you need more than just luck. And speaking of safety, what about the safest asset of all? Trap 4. Government bonds, gilts. UK government bonds, or gilts, are often hailed as the bedrock of safety in the financial world. They're debt issued by the government, considered virtually risk-free because the government can always print more money to pay you back. On paper, they offer a guaranteed return. So what's the catch? The catch is inflation again. While gilts protect your capital and offer a predictable income, their returns often fail to keep pace with the rising cost of living. This means your wealth, in real terms, is stagnating or even declining. For long-term wealth creation, simply preserving capital isn't enough. You need growth that outpaces inflation. Relying solely on gilts for your future is like driving with the handbrake on. If even the government's own bonds aren't building wealth, what about something designed for retirement income? Trap 5. The annuity trap. When you reach retirement, the idea of a guaranteed income for life from an annuity can sound incredibly reassuring. You hand over a lump sum, and in return, you get a fixed income until you die. Sounds secure, right? Here's why it can be a trap. Once you buy an annuity, that money is gone forever. You lose access to your capital. Even worse, if you choose a fixed-rate annuity, the purchasing power of your income will erode significantly over time due to inflation. What seems like a comfortable income today could feel meager in 10 or 20 years. While some annuities offer inflation-linked payments, these typically start at a much lower income. It's trading future flexibility and potential growth for immediate but diminishing certainty. Before committing to such a permanent decision, understand the long-term implications. But what about products that promise safety and returns? Trap 6. Guaranteed investment products. Be wary of anything marketed as a guaranteed investment product. While the word guaranteed sounds fantastic, it almost always comes with significant caveats, usually in the form of high fees and limited upside potential. These products are often complex, opaque, and designed more to benefit the provider than the investor. They might offer a guaranteed minimum return, but that minimum is frequently so low it barely beats inflation, if at all. And if the market performs exceptionally well, your returns are capped, meaning you miss out on the real growth. They're like a parachute that promises a soft landing but cuts off your ability to fly. Always read the small print, understand the fees, and question what you're truly guaranteeing yourself beyond a hefty bill from the provider. And while we're on the subject of tax-free options, Trap 7. Cash ISAs. Cash ISAs are the UK's darling of tax-free savings. The promise of earning interest without paying tax on it is undeniably appealing. But much like standard savings accounts, the critical flaw here is the interest rate. For years, the rates on most cash ISAs have lagged significantly behind the rate of inflation. This means that while the government isn't taking a slice of your interest, inflation is still eating away at your capital's real value. You might be saving tax, but you're still losing purchasing power. It's a classic case of winning the battle, no tax, but losing the war, eroding wealth. For many, a stocks and shares ISA, despite its inherent market risk, offers a far greater potential to beat inflation over the long term. But what about the ultimate safe haven, the one asset touted for centuries as a store of value? Trap 8. Physical gold. For centuries, gold has been seen as the ultimate safe haven, a protector against economic turmoil. Many UK investors buy physical gold, believing it's an impenetrable shield for their wealth. However, while gold can be a good diversifier, relying on it as a primary safe investment can be a trap. Gold doesn't generate income, it doesn't pay dividends or interest. It's simply a commodity whose value fluctuates based on supply, demand, and market sentiment. It can be highly volatile, and you face storage and insurance costs. Over long periods, diversified equity investments have historically outperformed gold even during times of crisis. While it can offer some protection during extreme market instability, it's not a growth engine and often underperforms assets that produce something or have underlying earnings. And finally, a product often confused with investment. Trap 9. Life insurance policies as investments. Some life insurance policies are marketed as investment vehicles, combining a death benefit with a savings or investment component. This can be an extremely dangerous trap for the unsuspecting. These policies are notoriously complex, making it difficult to understand exactly where your money is going. They often come with exceptionally high fees and commissions that eat significantly into your potential returns, especially in the early years. The opaque nature means you often don't have clear visibility of your actual investment performance, and unlocking your cash can be incredibly difficult or expensive. For most people, it's far more efficient to keep insurance and investments separate. Buy pure term life insurance for protection and invest separately in transparent, low-cost vehicles. Don't let the illusion of a combined benefit trick you into a high-cost, underperforming investment. So, we've unmasked 9 seemingly safe assets in the UK that are, in fact, undermining your financial security. Traditional savings accounts, the pitfalls of buy-to-let, the low-probability lottery of premium bonds, inflation-eroded government bonds, restrictive annuities, expensive guaranteed products, the subtly eroding cash ISA, the non-income generating physical gold, and the high-fee maze of life insurance as an investment. Each one, in its own way, is silently shrinking your purchasing power and preventing you from building real, long-term wealth. Understanding these financial quicksands is the first crucial step. But don't despair, because knowing the traps is only half the battle. The real power comes from knowing what to do instead. The question is, are you ready to take control? Now for the crucial part. What should you do instead? The path to gradually improving your financial situation and genuinely growing your wealth involves strategies focused on beating inflation and generating real returns. Consider diversified, low-cost global equity funds, which offer exposure to a wide range of companies and sectors, historically outperforming many of the safe assets we discussed. Explore tax-efficient vehicles like stocks and shares ISAs or self-invested personal pensions (SIPPs), which allow your investments to grow free from UK income and capital gains tax, provided you adhere to the rules. Always consult with a qualified financial advisor who understands your personal circumstances. This is not financial advice, and all investments carry risk, including the potential loss of capital. There are no guarantees of returns, and past performance is not indicative of future results. But there are ways to build a stronger financial future than the traps you've just learned about. The time to take control of your financial destiny is not tomorrow, but right now. Every day you delay, inflation continues its silent assault on your savings. Don't let fear or outdated advice dictate your financial future. Informed choices combined with consistent action are the only true path to financial freedom and security. You have the power to change your financial trajectory, to move from merely saving to truly building wealth. It requires effort, education, and a willingness to challenge conventional wisdom, but the reward is invaluable. If this video has opened your eyes to the hidden dangers in your finances, if you've had an aha moment, please smash that like button. It tells me this content is valuable to you. What was the most shocking safe asset you learned about today? Share your thoughts and experiences in the comments below, and let's keep this vital conversation going. And if you're serious about taking control of your money and want more insights like this, don't miss out. Hit that subscribe button and click the notification bell so you're always the first to know when we uncover more essential truths about personal finance in the UK. Remember, true financial freedom isn't about avoiding all risk. It's about understanding it, managing it, and making informed decisions that serve your long-term goals. Your wealth deserves more than to be silently eroded. Take action, educate yourself, and build the future you truly deserve.